investor demand for SpaceX appears sky high, attracting more than $70 billion in orders from retail investors alone. That IPO set to price this afternoon and begin trading shares tomorrow on the equity side. But the company has already hit a home run on the debt side. SpaceX has reportedly lined up investment-grade ratings from 3 major bond ratings firms, underscoring the growing confidence in its credit profile. In fact, Marathon Asset Management CEO Bruce Richards says this rising star is the GOAT after SpaceX refinanced $17.5 billion of debt, some of which had cost more than 12% to service, with a $20 billion facility that cost somewhere in the mid-4s. I'm pleased to say Bruce joins me at the desk now, and this is fascinating, Bruce. You know, right. I love the term rising star and fallen angels, but this must be, is it the biggest rising star of all time?
Of all time, because, you know, first of all, SpaceX is the biggest rising star of all time. You see what's happening in the equity market, you know, pricing a $1.77 billion IPO, the biggest IPO ever being 2012 when Facebook came to market with $104 billion. And so it just is an order of magnitudes greater than anything we've seen. In the credit markets, $17.5 billion, as recently as last year, pricing a 12.5% coupon last June. And here they are taking the full debt stack, 10, 11, 12% coupons, you know, repricing it down to a 460, the 10-year note today being a 453. So, you know, it's definitely an IG rating because when you look at $20 billion of debt that they just priced in a 460, and rising star is a term that we use when a non-IG or high-yield issuer, and they weren't rated non-IG by the rating agencies. They were non-rated, but they had 10, 11, 12% coupons that are now a 4.6% coupon. So they reissued, as you said, $20 billion to refinance the $17.5 billion outstanding. And when you think about a market cap of $1.77 trillion, or, you know, call it rounded up, end of trading day tomorrow, say $2 trillion, and only $20 billion of debt, that's only 1% of the entire enterprise value is in debt. In fact, with all the cash that they have, which will be in excess of $80 billion of cash, they have no net debt. Right. So it's clearly an IG-rated company as we stand today.
No net debt now.
As the markets view it.
I have to ask, Bruce, you know, I mean, you're one of the most well-traveled, well-connected guys in the credit industry. What are you hearing about their plans to raise further debt capital?
Well, certainly they'll have capital needs, and they'll use the debt markets to tap into, you know, those capital needs as companies, you know, obviously do that. And so for SpaceX to have $30 billion or $50 billion of debt is completely within the realm of a strong BBB credit.
At a $2 trillion equity market capitalization, it really is nothing.
And with the cash flow they're going to generate as a business, and you see what they've done, you know, with their data centers as of recent, and all the cash flow is going to be gushing, and the returns that they're making off of that investment. And so the company's very well positioned across the board.